Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VISBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VISBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VISBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Hello, good morning, everyone, and welcome to the VISBDC's hosting of the 5 C's of SBA loan eligibility. Today's session presents the SBA Guarantee Program and how lenders use it to make loans. Attendees will become familiar with the 5 C's of lending and get acquainted with resources to help find lenders and put together an effective application. Today's lead presenter is SBA Senior Area Manager, Wayne Huddleston. Here's a friendly reminder to put your questions in the chat, and they will be addressed either by the presenting team directly in the chat or later during the question and answer segment. A copy of this presentation will be attached to the post-survey email, and we encourage you to fill that out to let us know how we are doing. So Wayne, without further ado, the floor is yours.
All right. Good morning. Thank you, Sharika. As Sharika said, my name is Wayne Huddleston. I'm the Senior Area Manager for SBA here in the Virgin Islands. Today we're going to have a presentation on the 5 C's of SBA loan eligibility. This is a framework by which all lenders review loans. It is not something that is unique or specific to SBA at all. It is just how to qualify for a loan, and we're going to cover the things you need to know before talking to a lender anytime you're seeking a loan for your business. We'll go through a few things here. We'll go through sources of capital during this presentation. Before we talk about the 5 C's, I want to share information about other things other than loans and other sources you can turn to fund your business or your business's growth. We'll talk about the 5 C's, and I'll explain each one of those. Then we'll talk a little bit more about what government guaranteed lending is and how SBA loans work, along with lenders to provide capital, talk about technical assistance available, and then we'll leave time at the end to answer any question you have. So if during this presentation any question comes up, please just jot it down or remember it, and at the end we'll go through anything, any question you have related to lending, but also if you have any questions just about SBA in general, be happy to help with that as well. Before we begin, I'd like to show just a short video that talks about lending, but really talks about sources of capital and how you should be thinking about securing capital for your business.
Most young companies need money, which may or may not come as a big surprise, but they do. The #1 source they get money from is from their own savings. Whether it's a few $100s or even thousands of dollars, that's what we tend to tap first. And a lot of companies don't get money from any other place. They get money from their own savings, and then after that, they're lucky enough to be cash flow positive. They're profitable. So we talk a lot as if all companies require all sorts of external capital, and the reality is that more than half of young companies get all their funding from a combination of founder savings and then cash flow from the business, and we're out of here. Next up on the list is another one that catches, I think, people by surprise, and that's credit cards. Almost every young company you can think of, to one degree or another, was funded on credit cards. And it is the single largest source of capital for young companies after founder savings. And then the next place where they tend to get money is from friends and family. After I've tapped out my credit card and I've used up all my savings, I turn to people I know and say, hey, will you help me? And that's the third biggest source of capital. And then the next place is banks. And the banks are a totally weird situation because with banks, they get a lot of attention, but they actually fund very, very few young companies. But it's not their fault. You have to think about the way bank lending works and how shareholders want banks to lend. They want them to lend money against secured assets. And young companies don't have any secured. They have nothing to secure it against. And the joke in the industry is you can get all the bank funding you want as a startup as long as you don't need it. And then the last piece is venture capitalists. They get the lion's share of the attention, which in some ways is warranted. You know, your Googles and Apples and FedExes and many others all have venture capital money inside of them. But the reality is, and this is from Kaufman Research, less than 20% of the fastest growing companies in the United States took any venture money. And that's not because the VCs wouldn't give it to them. It's because they didn't want it or didn't need it, because they had all those other sources. I don't need money, and I certainly don't need money on these terms. Because, you know, venture capitalists, unlike banks, they don't lend against secured assets. They give you money in exchange for shares. So they take some of your company away. So my answer is if you don't need it, definitely don't get it. There's no question the venture industry has become staid. The irony is it's intended to fund disruption, and yet it's an industry that had become complacent. And interestingly, over the last 5 or 6 years, we've seen the emergence of other mechanisms for funding, like AngelList, like these kinds of peer-to-peer funding sources, as people increasingly provide capital in smaller amounts, but more people doing it directly. Having said all of that, though, venture capitalists are hugely important for those young companies that don't have access to bank money, but are growth companies. They have the prospect of being a $5 million or a $10 million company in a couple of years, and they need that growth capital to get there quickly. So it's a race. And the way you play the race is by getting money from people like venture capitalists who give you the money so you can compete with other people who are racing as fast as you are. If you can run a company off cash flow and some combination of credit card, your own savings, and friends and family, you know, Bob's your uncle. Run. You know, keep all the equity, because, you know, there's no better thing than being in full control of your own destiny.
All right, I wanted to show that short video at the beginning, just to emphasize that loans are not the only place to secure capital for your business, especially as a startup. As mentioned in that video, you may have noticed that loans came after personal savings, came after credit cards, came after your friends and family and others. Loans were a distant fourth for people trying to start or grow their business. There are many other sources out there, and you shouldn't consider loans as your only option. They certainly do play a role, and there are times for business where a loan absolutely makes sense. But there are also other areas: personal funds, friends, crowdsourcing, private equity, those types of things. Loans are just one piece of a large pie. This is also from research done by the Kauffman Foundation about where startups specifically get their financing. The vast majority, as you can see, comes from that personal savings and credit, people just starting it up on their own, friends and family helping. And then there's bank financing and other crowdfunding kind of sources and those types. But lending is a very small, according to this, is 1% for startups specifically to find funding. Now, as you grow as a business and you've had more experience and time and the financial statements to show, that bank financing piece can grow, but it is still just one portion of many other sources that are out there. The most common way for early stage businesses, startups, and businesses that have been around less than a couple of years is just simply bootstrapping. And that's a way of just finding creative ways to fund your business through cost cutting, through thriftiness, through doing something different and creative. There are many ways to help get through those early stages. And is the most common way, bootstrapping is the most common way of getting startup and early stage businesses going. But today we're going to talk about lending and securing a loan and what it takes to secure an SBA loan. We're going to talk about the 5 C's of commercial lending. And as I mentioned at the beginning, the 5 C's are not some unique formula to the Small Business Administration. They are a general framework that all lending institutions use to evaluate loan applications. Every lender has a different way of viewing these 5 C's. They still use the 5 C's. They just use them in their own ways. Some have different appetites for risk. Some look at particular industries and they're more comfortable with than others. Some require different levels of credit scores, or they're looking for different ratios or things in your financial statements. But they're all going to look at the 5 C's in some way. So it is essential that before you walk into a lender and begin asking for a loan, that you have a general understanding of what those 5 C's are and how you specifically, or your business specifically, stacks up in those areas. So you can come in to that meeting with a lender and be talking their language, understand what they need to see to get to a yes. And perhaps even before you talk to a lender, if you evaluate yourself on the 5 C's, you can decide, okay, maybe I don't walk into a lender right now, but I can get there in a couple of months. So I'm going to talk about each one of these 5 C's a little bit more in depth. So the first one I want to talk about is capacity. Many lenders, if they're asked which of the 5 C's are most important, many of them will say it's capacity, because that is just simply the ability to repay the loan. And that's what they're really primarily interested in, that if you are provided a loan, that you will repay that loan. That's the most important thing to a lender. And capacity evaluates that ability to repay the loan. They're going to make sure that you have financial statements, especially if you're a business that has been going for a few years. You need to show your financial statements to show how much debt are you carrying on your books right now, what's your balance sheet look like, how much cash do you have, what kind of assets do you have, and what kind of income are you generating. They will use that information to develop ratios to help them mathematically better understand whether you have enough money coming in after you receive this loan, and this debt and monthly payments are added to your books, that you will confidently have enough money coming in each month to pay all your debts, including the loan you're about to be given, and continue to pay yourself and operate the business successfully. If they cannot get the confidence of that from the documents you're providing through your financial statements, through your business plan, credit score, all those, it's going to be hard to get there for a yes, no matter what. So capacity, simply your ability to repay, show that if you added this debt to your monthly payments, that you can show and prove that you can make those payments every month and not be too financially burdened as a borrower. I also want to talk briefly about credit score. Credit score comes into this as well. Credit score varies among, what it takes to get there. It depends also on other factors in your loan application. So a lot of people ask, well, what's that score need to be? And it's hard to say that there's a specific number, that you reach this number and you're automatically going to get an approval for a loan. You're not. It's just one piece of a bunch of factors. However, generally, if your score is not above 650, there's no need to really talk to a lender at this time. You need to work on raising that score and getting that up into the 700s, the mid 700s if possible, and get to a better area. Like I said, that number varies among all lenders, but there is a generally accepted floor, and that comes in right around 650 for a personal score if you're using your personal credit for a loan. All right, the second C, which is also, they're all very important, but this one's very important as well, is the amount of capital that you are personally going to put into a loan. Just like with any loan, a car loan, a home loan, or others, lenders want to see that you're putting some sort of skin in the game. that you're putting down some percentage. Typically, a lender wants to see that you're putting in at least 20% as a borrower to say, I'm going to put up this amount. I need a loan for the remaining amount. So if you need a total of $100,000 for a project, the lender's going to want to see that you're not asking them to solely finance your business venture without even you kicking in any money. They want to see that you're going to put in something. So you should consider how much cash that you can put in on this deal and how you're going to pull that together and then leverage that cash to get the loan you need. And as I said, many lenders are looking for at least 20% from the borrower to show and give enough faith to them that you are invested, that you're part of this as well. You're going to have to put in some sort of capital. The third C, which lenders will evaluate your loan application by, is collateral. And these are simply assets that must be pledged as security for the loan, and it provides what the lender would consider a secondary source of repayment. So just like with a home loan or a car loan, if you stop paying on those loans, the banks have the ability to repossess your car, repossess your home. Same with a business. If you're getting a loan for your business, you're going to have to come up with some sort of assets to pledge. That is typically something that that they can easily sell on the market. They're not very much interested in your inventory. A lot of times they're not even interested in your equipment unless it's something that is easily sellable and usable in a wide in the marketplace very easily. They're typically looking for real estate, for buildings, something that they can assess. Okay, this has this value. If so-and-so stops paying on their loan, we can secure this asset and then resell it on the market and get our money back in this loan. Again, just because you have collateral doesn't mean necessarily that you can still get a loan. You still have to consider, they still have to consider the other C's of this. For instance, if you didn't show the capacity to repay that loan, even if you had 100% collateral to show and put up for the loan, lenders are not interested in getting in the business of selling real estate and liquidating assets. That's not something they like doing. It still costs them money to go through the process of liquidating your assets and securing them and going through courts and all sorts of things. It's much better if you pay the loan. But at a minimum, as a secondary source of payment, you're going to have to think of some sort of collateral to provide for a loan. So if you don't have any collateral, you should rethink that before you talk to a lender. The fourth C is the conditions of the marketplace. This is largely explained and proven in your business plan to a lender. They want to see that you understand your industry specifically. They want to see that you understand the local economy and the local environmental conditions that can impact your business. They want to make sure that you understand your competitive landscape, your suppliers, if you're retail, how you get your sources, what issues and trends impact your business. Are you heavily reliant on cruise ship traffic? Are you heavily reliant on other factors? We want to see that you certainly understand those, and then that you've gone through the potential risks and hazards that can impact your business and shown that you've thought those through and are prepared to mitigate against those should something happen, either through a natural disaster hits or some other issue hits that will impact your business. How are you going to make sure that you can thrive? So they want to make sure that you've thought this through very well, that you understand how to be competitive, that you understand what your competitive advantage is, and how you're going to use that to make sure you're successful and bring in the revenue that you need to pay your loans. And then finally, the fifth C is character. And this is more of an overall general opinion that the lender will have of you. They do assess your credit score as part of your character as well. That gives a score there, of course. But most of the character assessment from a lender comes through their interaction with you and the general trustworthiness and credibility they think you have as a person. So, for instance, when you speak to a lender and you say you're going to show up at a certain time for a meeting, do you show up? Do you provide the documents and financial statements on a timely matter? When you say you're going to provide them, do you actually provide them? When there are negative things in your background, are you upfront and honest with those? If there is something in your credit score, credit rating that they're going to see, have you told them about that? And have you explained that? Do you have a good reputation in the community? Are you shown to be someone who is a person of your word? All sorts of things. So these are things that can impact your application significantly, even though they're not necessarily as tangible as collateral or cash or credit rating and those types of things. These are more of a gut feeling and a subjective thing that the lender goes through to assess. But they can help you. I have seen a character analysis by lenders help loan applicants get across the line when other parts of their loan application seemed more risky. I've had a lender talk to me one time and went through a long process with a borrower, and that borrower had a bankruptcy in the background, had some other negative issues with their loan application, but they also had a lot of positive issues. And on the line, normally lenders like, I'm not sure which direction to go. But it came down to his gut feeling with that borrower, because that borrower was always 100% honest, always did what they said they were going to do. There were no surprises in the process, and he just felt this is someone we can trust. This is someone who's going to pay back this loan, and they were able to get to approval. I've also seen character sink a loan when everything else in the application looks really well. I've seen very successful businesses that were growing fast in a positive industry for a lender, seeking a large loan that was gonna that everything on paper looked fantastic for the lender, and then the borrower either hid information that was negative that the lender found out about, or wasn't honest in some other way, and that can just sink a deal. Because if a lender thinks in any way that you're not honest in some way, they'll walk away from that deal real quick. So character is very important. So those are the 5 C's. What I recommend before you talk to any lender is, and I would do the same thing if I was seeking a business loan, is I'd get out a pad of paper, I'd just write down 5 C's, and then think about my business specifically. How am I assessed, or how would I assess my business under these 5 C's? What things do I have to show that I'm a good credit risk for that lender? And assess those before you go into any meeting with a business. With a lender. I do want to talk a little bit more about financial statements. Probably the most common reason local lenders here in the Virgin Islands say that they have trouble getting to a yes on a loan is because borrowers do not have sufficient financial statements for them to evaluate. So that is very important. They're going to want to see your business plan. They want to see your expense sheets, financial statements, and projections. So I'm going to go through a few of the financial statements that are essential for a lender to evaluate. So if you have had a business for at least 2 or 3 years, you should have financial statements to show, and we're going to show you what they're looking for. These are the 3 primary ones that a lender is looking at to assess. They need to see a balance sheet for your business. That is simply a snapshot of your assets and liabilities or claims against those assets to show what you have, who you owe, what you owe out there, and how it is financed. They just want to see what your worth is as a business. 2, they're going to want to see your income statement, and that's going to show revenue and expenses and essentially the bottom line of profitability, your net income over a specified period of time. And then they're going to see your cash flow statement and want to see that, and it shows the sources and uses of cash, as well as the net change of cash on hand over a specified period. So I'm going to show a little examples of very basic examples of what those look like. A sample balance sheet is really divided into 2 parts: your assets and your liabilities or claims on assets. And these can be further divided by your amount of cash. You know, in a lot of businesses, you're not going to have marketable securities, but some larger ones might. But you may have assets, you may have a building that needs to show the value of that building, or land, or other, or durable equipment would go in under here as well. And then you would have your cash and inventories right there. And these are the assets that affect your bottom line as a business. These would be your claims on assets. So if you had any loans, which are notes payable here, that would show up as what that loan amount is. Any other accounts payable that you may have. If you had this building, but you have a mortgage on that building, they want to see that here. And they want to see how much equity you have in that business. And then there's a sample income statement. As I said, this is over a specified period of time. This will show your total sales here. So let's say for this business, this had 1.2 million over sales, but to generate those sales, to cost of goods sold, perhaps this is a retail business, they had to purchase things, and the purchase of the inventory was 850,000. And of course the other expenses that they had, such as general administrative expenses, all sorts of things, interest expenses, and if there's additional income from operations, more than just the goods that you were selling, all sorts of things, it's just all got to be here. So this would show what amount of income you're making over a specified period. They are very interested in this bottom line net income number, that after all your revenues and all your expenses are accounted for, how much net income are you making over that time period? And does that allow for you to add another amount of debt and another loan that's going to cut into this number and still be able to profit as a business and operate comfortably? And this is your cash flow statement. This shows a little bit more detail on your changes in the inventory. Any other things you may have. A lot of other smaller businesses aren't necessarily issuing stock or equity in a business to partners, but you may at some point. So someone may invest in your business and give you money. That's going to need to show that in there. They're going to want to see where that cash flow comes from, because some sources of cash flow can distort the financial picture of your business. So they want to make sure they see everything. So for instance, if you sold a bunch of equity in your business and had an injection of cash, that's good, but that's not something that a lender is going to be able to rely on a regular basis coming in. So they're going to want to make sure that they can assess that and have a good understanding of what the cash flow in your business looks like. So those are the three financial statements that are necessary for a lender to look at. There are lots of sources that can help you in putting these together. If you ideally, even as a small business, you should have an accountant, or if you don't have an inside accountant or bookkeeper or finance person, you should contract that out. There are plenty of other accountants and CPAs out there that do these types of things for small businesses and can put them together. You have to pay them for it, of course, but as well, it is worthwhile for sure. Of course, there are lots of software for smaller businesses, depending on your size. QuickBooks could be a very good option for you. And there's also the Small Business Development Center that can help you look at your financial statements and evaluate them and understand how to generate these reports on a regular basis and keep up with them. All right, so I'd like to talk, now that we've talked largely about the 5 C's, I want to talk about our guarantee program at the Small Business Administration, how that works, and what it means to have an SBA loan. So the SBA provides loans directly only when there is a declared disaster. So a lot of people here in the territory do have SBA loans directly from SBA and that are still serviced by SBA, but those are for disaster loans, either to repair a home or get a business up and running again after a disaster. But when there's not, and like right now, there's not a declared disaster in our territory, but we are still providing SBA loans but those are in the form of a guarantee. So we are going to the bank and we have offered our guarantee to every major lender here in the territory. All of them have used it in one way or another at some point in time. They use this to reduce their risk. So when you walk into a lender to seek a loan, they are evaluating you by the 5c's. Very frequently, in fact, I'll say very infrequently, is a borrower walking in the door with all the 5c's looking really good for a lender to get to a yes. In fact, it's very rare. I would say less than 10% of the potential borrowers that walk into the door for a lender requesting a loan actually are fully prepared and look really great on all the 5c's. As that video in the beginning said, oftentimes it's true that you can walk into a lender to get a loan and you can get all the money you want as long as you don't need it. And so a lot of times, though, people walking into a lender need the loan in some way to help them avoid a financial crunch, and that immediately already provides a level of risk for a lender. And that's when they're often will look to SBA to help reduce that risk in any way they can. We will provide a guarantee anywhere from 50% to 90% of the loan, depending on the type that it is. And essentially tell that lender that if the loan goes bad, we will cover 50% of it, or we'll cover 90% of it. We do not take all the risk because these are public funds. And we want to make sure they're protected, and we want to ensure that lenders understand that they are still on the hook for some amount of that loan, and we are always in a first lien position. So even if we are covering 90% of the loan, if someone has paid back 85% of the loan already, we're going to get our 10%. We're going to get our money back first before a lender gets it. So they're responsible for that final 10% all the way to the end. So it doesn't reduce all the risk. So they're still going to look at the 5c's. And what I typically see is that our guarantee program will help a borrower overcome one, maybe two, but really not more than that of the 5c's. So if you have a really good cash flow statements, you have shown that you have enough cash that you're putting in a deal, you have a fantastic business plan, you've shown good character, all sorts of things, but perhaps you just don't have enough collateral to really get to a threshold that the lender needs, then maybe that guarantee can help. But everything else would need to be good. Or perhaps you have sufficient collateral, but you've only been in business a couple of years, but everything else looks great. You have sufficient collateral, cash, good credit score, everything else, but you don't have sufficient financial statements to show the amount of history that a lender wants to see. That's, again, where a guarantee can come in. We leave it up to the borrower to decide how best to use that guarantee. We just offer the guarantee, and then they can decide how to use it for themselves. As I mentioned, all the major lenders here in the territory utilize our guarantee. Popular, First Bank, Oriental, Merchants, Bank of St. Croix are all authorized SBA lenders. However, you can seek out other lenders as well. We do have a link on our site called SBA Lender Match. So if you just went to sba.gov, search for Lender Match, you'll be given a page where you can put in information about your business, provide your name, how much you're looking for, where you are, what it's going to be used for, answer some basic things about your business, about how big you are, how long you've been in business, those types of things. It's not a lot of questions, but you should answer every single one of them so that a lender can assess you appropriately. When you hit send, that information goes to every lender in our database, including lenders not located here in the territory, who have expressed a willingness to look at deals in the Virgin Islands because they're willing to offer a loan in the Virgin Islands for the right conditions. They will look at that. When they see your email, within 48 hours, they're going to respond to say either I'm interested or I'm not interested. Any lender that says they're interested, we simply link them with you as a borrower, and then you can go through that process with them of going further down the line. It's very simple to use. And so you can find that on our site. And of course, you can also talk with any of the lenders here. I always recommend when someone is seeking a loan that they first start with a lender where they have some sort of history. So if you have accounts already with one of the local banks, you absolutely should start there. It's far easier for a lender to evaluate you as a prospective borrower if they know something about you. Just like if you think of lenders as just people as well, if you walked up to a person that didn't know you at all and you asked them for money, the likelihood of them giving it to you is pretty low. But if it's someone who you have history with and have some experience with, and they know you as a trustworthy person, especially as a client of a bank, they've seen your accounts, they understand your financial position, it's far easier for them to get to that yes and get through the financial statements if they already know you as a customer. So I always recommend starting with whoever you're working with already. So what's the advantage of using an SBA guarantee for banks? Of course, as I mentioned, it just makes it less risky for them. And because we're guaranteeing a portion of that loan and just cuts down the amount that they could put at risk if the loan did go bad. For you, it helps you obtain a loan without a large down payment or without much collateral on hand if you don't have it. It provides for good interest rates and longer terms. I say good because those interest rates can fluctuate. And right now, the interest rates on business loans are still fairly high from a historical sense. You can be easily paying over 10% for a business loan right now because our loan rates are tied to the federal prime rate. However, it does prevent it from going into a predatory lending type of interest rate charge where if a bank is going to use our guarantee, we have maximum interest rates that they can charge. So they can't charge beyond a certain amount. It's still tied to the federal prime rate, which is kind of high right now, so they can charge that. But at least you know that there's going to be a max and they're not going to charge outrageous interest rates on your loan. And they can't put things like demand clauses and balloon payments at the end of a federally backed loan. So you can be assured that there's some safety and security in those terms that lenders are going to be using. An SBA-backed loan can be used for anything, though, almost. Starting a business, accessing credit. Sometimes people are seeking a loan, but really they just need a line of credit. So a bank can use our guarantee program to extend that. Can use it to purchase a facility or land or inventory or all sorts of things, and especially exporting a product. That's where our highest guarantee for our lender comes into play. That 90% is for international loans and export loans. There's lots of things you can use it for. There are a few things you can't use it for. Of course, anything that is illegal federally. You cannot use public funds to guarantee or anything that is of a nature that it may not be illegal, but it is not the kind of activity that the public wishes to use their funds to back. So there are a few minor things, think of like pornography or some other thing like that may not be illegal, but is certainly not something that you're allowed or a bank is allowed to use funds for. Most common issue that comes up with someone seeking SBA guarantee and is not able to get that guarantee from us, typically though, is investment properties. If someone is trying to leverage an SBA loan to invest, for instance, in like an Airbnb or something like, or real estate that they're not necessarily running a business out of, but they're buying the real estate in the hopes that it will grow in value or they can rent it out and then sell it. Those are considered investment activities, and those are not eligible for an SBA guarantee. That's not to say you can't get a loan for it. It's just to say that the SBA guarantee cannot be part of that loan, and a lender will have to evaluate it without that guarantee. So there are a lot of resources to help you as you seek out a business loan. I've been with SBA for many years. I've owned my own business in the past. I've also been director and led a small business development center in the past. If I was starting a new business today, though, I still would go to the SBDC or SCORE or VBOC or one of those just to get their objective feedback and guidance on what my business plan is. because a lot of times you can have blinders on when evaluating your risk or the feasibility of your business idea. You can ask friends and family, and oftentimes they can say, oh yeah, that's great, go for it, and give you a lot of encouragement. But the SBDC, SCORE, VBOC, our resource partners, they're only interested in your success. And they know that by just giving you a lot of encouragement and pats on the back, that's not gonna do it. They want to make sure that you actually, by the numbers and through objective data and analysis, are going to be successful. So they will give you that objective data and analysis. They can help you look at your business plan and help you with edits on that and understand how to improve your messaging. They can evaluate your financial statements before you walk into a lender to say, you're not showing what a lender needs to see to get to a loan. And then when you're lender ready, they can introduce you to a lender, and they can even help you sit through that process with a lender if you allow them to. It's a free resource. It's very valuable. They do a lot of great work here at the SBDC, who's hosting today, but also SCORE has a lot of great things as well. At the SBDC, you can get one-on-one counseling and advice in addition to the training. At SCORE, they operate more as a mentoring and coaching organization, but they also have a lot of fantastic templates. If you're looking for a template to start building your business plan around or your financial statements, they have a lot of great things at their website here. And then there's what's called a Veterans Business Outreach Center. We have one based in Puerto Rico, but it serves the Virgin Islands as well. And it is largely offering a lot of the same assistance, but specifically focused on veteran entrepreneurs and business owners. You can use all three resources if you qualify. There's no limit to them. There's no limit to the amount of times you can meet with these advisors and entities. The only limit that there really is, I've seen in the past, sometimes people will continue to make appointments and continue to come in and speak with a counselor, but they're never really making forward progress. And so sometimes, they will say, look, when you actually do something like this, come back and let's talk. But you can continue, a lot of times you can just continue to meet with them for many years, and it's free of charge. I have seen SCORE mentors who've had a client who reached out to SCORE when they had an idea, and that's all they had, and they just want to think through the feasibility of it, and they were matched up with a mentor or coach from SCORE, and then 15, 20 years later, they're already a successful business. They've got multiple locations, they're growing, and they still check in with their SCORE mentor, have coffee, and chat about what they're doing and gather that advice. It's like having a free board of directors or a free advisory board to help you out. Certainly recommend you take advantage of those. And I talked about all this already. I should have just gone to this slide while I was talking. Sorry for that, but these are all the things I've already talked about, the things that an SBDC advisor can do. Assess the feasibility of your business, connect you to lenders, connect you to other industry experts, and just help you develop your business plan and manage that business growth and success in the years ahead. There are also a lot of resources available to you online. If you follow SBA, you can keep up with us on, I don't know how many times I've done this. I've seen this slide and I have not updated it for X. I need to change these symbols, but you can follow us on X. You can follow us on our website and get information. Always, you can email me. My office is here in the Virgin Islands. Email is typically the best way to get in touch with me, especially if you have an in-depth question. Oftentimes, I can forward it to the right person for additional assistance. But you can always give me a call as well. And then we have what's called the Learning Center dashboard at sba.gov. We have a lot of pre-recorded videos on a number of topics, whether that is marketing your business, financing your business, building a business plan, or getting into federal contracting and the certification process. There are a lot of great resources on our website that you can use free of charge. All right, so that is it for my presentation. I'd like to just open up to any questions anyone may have. And if you have a question, you can just type it into the chat, or I believe if you raise your hand, you want to ask verbally, you can raise your hand, and I think Sharika can unmute you, and you can ask that way. We'll wait a few minutes and answer any question you may have.
That's correct, Wayne. Persons can unmute and ask their question directly.
Good morning. My name is Samuel Gittens. I'm curious about veterans small business loan. How well has that been working in the Virgin Islands?
There is not a specific veterans small business loan. Years ago, we used to have a loan program that essentially what it did is we negated the fees for veterans seeking an SBA loan. But we don't have any fees on our SBA loans for anyone right now. But we don't have a specific loan program dedicated towards veterans. The only veterans resource specifically that we have is our Veterans Business Outreach Center. We have a number of programs offered to them, similar to the Transition Assistance Program. When soldiers are getting off duty, there's a program called Reboot, where we can offer that to any veteran out in the community. It's basically a 2-day program. Sometimes we can condense it into one that gives a full program on starting a business, developing your plan, seeking sources of capital, and you can sit down with counselors one-on-one to help with that. And then they're very well connected with lenders as well that can help with the access to capital process, but there's not a specific loan program for lenders.
Are you familiar with any investor financing available in the territory?
That is an area where the territory is very weak in our economic landscape. So there is not that I'm aware of, a formalized, established venture capital source here in the territory. Now, there are multiple people in the territory who are willing to look at deals, and they're willing to fund deals if the right things make sense. But there's not a formalized venture capital program here in the territory. I wish we did have one. I have been encouraging some of these wealthy individuals who have invested in the past to form a venture capital group. I've encouraged the territory to utilize its funds in that manner, and there are several programs that they can use. We just don't have that here in the territory right now.
Okay.
Do you have the type of business where you're seeking venture capital?
Yes, I'm just looking to start. I'm about to retire from the police department, and so I'm looking to do this on the side for myself.
Okay. Yeah. I would recommend just, talking with some folks at SBC and sitting down and saying, here's my plan. Here's what I need for funding. Here's what I'd like to do. What are your thoughts? They may know, if you're looking for venture capital, they know someone who might be interested in investing in something. They may know of other sources of capital that may help, or have some ideas to help get it going. I assume this is something you haven't started yet, but that you are trying to. Is that correct?
That is correct.
Okay. Yeah. I'd set an appointment, sit down with them and talk through that plan a little bit more in depth.
All right, gotcha.
Or the VBOC, as I mentioned before, the Veterans Business Opportunity Center.
Wayne, we had a question in the chat. Do you have resources for nonprofits?
We do not. We do not have loan programs for nonprofits outside of our disaster loans. So if a disaster hits, we can provide loans to nonprofits. But outside of that, by mandate by Congress, they want the Small Business Administration to be laser focused on for-profit businesses that are growing the economy in that way. So we don't have other resources for nonprofits unless there's a disaster.
Well, I don't see any more questions at this time. I'll give everyone a chance to place their questions in the chat. I'll just go ahead and Just let persons know that the VISBDC has so much more in store for you as VI small businesses. You can visit our website at www.visbdc.org. Download the VISBDC app on your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google Business, and subscribe to the VISBDC YouTube channel for new uploads of our on-demand webinars. Just to mention a few of our upcoming trainings, we have Surety Bonding 101. Learn about SBA's resources to help your business start, grow, and succeed. The Credit Blueprint, building a strong financial foundation. A step-by-step guide to launching a USVI business startup. Aiming for loan approval, building credit the right way. Building sustainable habits for small business growth. The Small Business Plan Canvas, designing your entrepreneurial journey. And SBA webinar featuring the topic, how to apply and qualify for an SBA loan. Those are all accessible from the VISBDC website. You can go ahead and register in advance. So when I don't see any more questions, so I do believe it's,
I was gonna say one more thing,
sorry,
Sharika.
go ahead.
I just wanted to expand partly on the question from Mr. Gittens earlier regarding venture capital available in territory. I did mention there's not a venture capital group established here in the territory. However, there are what we call small business investment companies. These are investment groups that are certified by SBA to provide investment to small businesses out there. You can look on our website, SBIC is what they are, Small Business Investment Companies, and learn more about them. You can find a full listing of all the ones that are out there in the country. You can sort it by type of industry they're interested in or geographic area they're interested in. There have been in the past small business investment companies that have invested in businesses in the Virgin Islands. Now I say that, these are oftentimes business or investment companies, and venture capital in general, really, are looking for a huge payoff. They're typically going into deals with the understanding that 9 out of 10 investments that they make are not going to pan out and they're going to fail. So they need all of them to have the potential to be a huge home run. And so they're typically not looking for a small business that might be constrained by the population or geographical area or a retail business. They're typically looking for an emerging technology to invest in or something new that can really expand exponentially. But that's not to say that's not a fit for what your business. I don't know what all of your businesses are and what you're trying to do, but I want to make sure that you're aware that even though there's not a venture capital firm here in the Virgin Islands, there are these SBICs out there, and you can get a full listing on our website and you can reach out to them. We'll provide the contact information and you can say, hey, I'm interested. Here's my business. Are you interested in talking? And it could be a possibility.
Thank you. I appreciate that. I will look into that.
No problem.
Okay, so I don't
That's
see
it.
any more questions. So once again, I would like to encourage everyone to take the survey. It will be emailed directly to you. Let us know how we're doing. And on behalf of the entire VISBDC network, Wayne, thank you for collaborating with us on this initiative. And we thank everyone for their time and attendance today. Do enjoy the rest of your day. Bye, everyone.
Thank you.